Hi everyone. I've been having a trade station problem and I just got off the phone with them and it looks like everything is fixed. Let me move that to yesterday's high. I'll get rid of that. We had a gap the other day and we just filled it on the open. And that dark green line is 4,000. And if you've been with me for the past year and a half, you know I've talked about that 4,000 a lot, and it's the most important price on the chart. And let me go back here. This is the daily chart, and if you go all the way back here to 2021, we gapped above 4,000. And every other big round number, 3,700, 3,300, the market went sideways, 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 sideways. And then 4,000, it did this. It changed the character of the market. We were in a weak bull trend, a channel, and then we got a breakout. And we broke out above 4,000. And at the time, I said that that makes this a very important price. And on the daily chart, we tested it here. I'm not confident that it was an adequate test on the daily chart, but this gap is also on the weekly chart and on the monthly chart. And actually, there are two gaps here. There's one there and there's one here. On the daily chart, we have the obvious gap here, but on the weekly and monthly chart, there's a gap there. And on those charts, it's not so clear that the market was adequately tested. So here is the monthly chart, and here's that gap, April 2021. We accelerated up, and then we topped out here and reversed down. And I said we probably would have to close this gap because the market tested every other big round number and spent some time there, but on 4,000 it did not. So the market probably had to test it. And back here I said that's probably not close enough to be a test. And then we've been around it for basically an entire year, about 8 or 9 months, oscillating around 4,000. So the gap tells us it's an important price. And then the market spending 8 or 9 months around it tells us it's an important price. The high is an important price. So we have two important prices, the high and that gap, 4,000. And they often generate a third important price. So we might get a measure move down from the all-time high to that gap. And that measure move is here, around 3,800. And it's below the pre-pandemic high. So here's the pandemic. That's the high right before the pandemic. And we might have to come down there. And there's something else that's not so obvious on this monthly chart. This low did not reach this pink line. That pink line is a 50% retracement of the post-pandemic rally, the rally that came after the pandemic. We almost got to it. On the cash index, we dipped below it, but on the E-mini, we did not get to it. And there are two ways to look. I don't know why it's doing that, but let me go back to that. Okay. There are two ways to look at that. The E-mini did not reach the 50% retracement, and the cash index did. So one way to look at it is to say, there's a divergence, and that means the bulls are strong. The E-mini bulls were so eager to buy that they bought above the price. I got a message. I just raised my desk, and I just got a message that audio was restored. Two ways to look at it. One is that the cash index, this is the E-mini. The cash index dropped below 50%. The E-mini did not quite get there. There's a divergence, and that means the futures traders, the E-mini traders, are very aggressive, betting that the market will stay above 4,000, or stay above the 50% retracement. The other way to look at it is the cash index adequately tested the 50% retracement, and the E-mini did not, and therefore it was not adequately retested, and we have to test it again. And right now, I think the second reason, the second thought is the correct one. So I think we have to come down and fall below that 50% retracement. And if we do, we'll probably fall down to that measured move, which is around 2,800. So right now, I think there's better than a 50-50 chance we're coming down here before we go to a new high. There's some other things going on with the monthly chart. We went down here and up there, down here and up there, down here and up there. Or you can say three legs down, two red, then green, and then red, green, and then red, green. So there are different ways to look at this sell-off as a wedge and a 50% retracement. And I've been saying since October that it's a good-looking buy signal bar. It's a wedge bull flag. It's a 50% retracement. We should get two legs sideways to up. And that's why, even though last month was a big bear bar, I said I didn't think we were going to go to a new low until we had a second leg sideways to up. And currently, we're forming a second leg sideways to up. So I think that before we get down here, we're either going to need a bull bar this month in January, or maybe we'll go a little higher, maybe we'll go all the way up here and form a double top. But I think that this first leg down is not the start of a move down below this. So I think January is probably going to be a bull month. Weekly chart. Now that's a mess. Okay. Weekly chart, and here's that gap. Okay. And you can see better that the sell-off did not quite reach the 50% retracement. Here's the low, here's the high, and there's 50%. On the cash index, we did reach it. Here's the cash index, and you can see this low is below the pink line. It dipped below a 50% retracement on that rally. But in the E-mini, it's above the line. And I think we have to get down below that line. And if we do, then I think we'll probably get down here. So I think there's better than a 50-50 chance we're going to go below the October low before we go up here. And at this moment, I honestly think there's at least a 50% chance we're going to get down to that measured move from the 4,000 gap over here and here. Here's that 4,000 gap. You can see we accelerated up instead of going sideways like we did all the other prior big round numbers. And then we've been oscillating around it for 8 or 9 months. So the market clearly thinks 4,000 is very important. And when you have two very important prices, they often generate a third price. So right now, I think we're going down here. Right now, we're forming a triangle. We've been sideways for 8 or 9 months. We have a high, we have a lower high. And if this forms a lower high, we'll have two lower highs and a higher low. We'll have a triangle, breakout mode. In general, 50-50, but because we did not reach the 50% retracement, and because 4,000 is a very important number, and I think, therefore, it will generate a measured move, and because we did not dip below the pre-pandemic high, I think it's slightly more likely that if we form a triangle here and get a reversal in the next few weeks, maybe around that bear trend line, I think it's slightly more likely that we'll come down here than it is that we'll go up there. Will I be surprised if we go up here? No. We got a wedge, 1, 2, 3, and we have a higher low major trend reversal. It's a 50% retracement and a strong bull trend. So the bulls definitely have good things going for them. So I would not be at all surprised if we go up instead of down. Okay, I think it's slightly more likely that we're going to go down. I think we're going to go up a little bit, but I think we're going to go down. And today we broke above 4,000 on the first bar of the day. I don't have a bull channel here, but we broke above the bull channel. We closed that gap on the daily chart. Over here we have this gap, and we closed that today. And we have a wedge on the daily chart, 3 legs up, 1 down, 2 down, 3. So the bears will try to get a sell signal bar today, and they're hoping that today is the beginning of the leg down. So 2 legs down, 1, pull back, 2. You can see the chart's been sideways for 8 or 9 months, right? And you can see on television, some of the pundits are very bearish, some of them are very bullish. No one knows what's going on, and that's because of this. We've been sideways for 8 or 9 months. We're in a trading range, and when the market's in a trading range, no one's really certain when the legs up and down end. You can get really strong legs that abruptly reverse down. You can get really strong legs down that abruptly reverse up. That's just a trading range. And right now, a really big first bear bar, a good candidate for the high of the day. So it's reasonable to be short, betting that we're going to go sideways to down today. The first bar of the day in general has about a 20% chance of being the high or low of the day. And depending on the context, it could be as high as 30%. And today, the context is good for the bears. We have a very big bear bar closing on or near its low. This is probably a 30% chance that it's going to remain the high of the day. We're at the 4,000 level. We closed the gap on the daily chart. We're reversing down from above the top of a bull channel on the 5-minute chart. We have a big bear bar closing on its low. And on the daily chart, we have a wedge, 3 tops, 1, pull back, 2, pull back, 3. So I would say at the close of the bar 1, 30% chance it'll be the high of the day. Bar 2 is a bull bar, a bull body, and that means this is less bearish than it could be. Now, one other thought I have about this is, yesterday was an average size day, and we reversed down strongly from above its high. We're at resistance on the daily chart, that gap, the 4,000 level. So you got to be thinking, today might be an outside down day. So at some point today, we may go below yesterday's low. You can argue this is kind of a spike in channel pattern, spike, pullback channel. The market tends to come down to the start of the channel, which is after that pullback, and then goes sideways. So if we do get down here, we'll probably bounce. It's also around the 60-minute moving average. The market, 90% of the time, we're either going above the Globex high or below the Globex low. We have a double top here. This is the Globex 15-minute chart. We went up, we went down, we went up again, and we're going down again. So it looks like we're going to try to get below the Globex low. And if we do, which is right around here, we'll probably get below yesterday's low. Today will probably be an outside down day. Can today be a huge bear trend day? It's possible, but the reason I think it will not be a huge bear day, I think we'll probably stop going down somewhere here, open of the week, that gap up from yesterday, the 60-minute moving average, and the start of this channel. So that's a lot of support. So if we do come down here, we're probably not going to collapse below all of that support. We'll probably stop going down, either go sideways or bounce. If you did short on the close of 1 or below 1, and you have 10 points, you could take 10 points. In general, the swings nowadays are 20 points or more. So if you sold at the 1 low or at the close on bar 1, I would exit at least part at 20 points or around the Globex low. Can you buy above 4 if it's a bull bar? I would not, because it's a bear microchannel, every high at or below the high of the prior bar. And if you have a bear microchannel that lasts at least 4 bars, chances are you're going to get a second leg sideways to down. So I would not buy above 4. It's still sell the close, sell the market, but now you're selling late, and we're around 20 points below 1. And nowadays, traders have been taking profits at around 20 points. Hang on a second. I want to get something on my other computer lined up. What I'm trying to do. Okay. I just wanted to confirm that low. And remember I said a lot of traders look for 20-point swings. Or the swing trade nowadays has been about 20 points. Scalp has been 5 points, sometimes 10 points. 20 points is 80 ticks. And to make 80 ticks the market, and if you enter on a stop below 1, it has to fall 82 ticks. And this low is exactly 82 ticks below that, and we're bouncing. And that tells you that a lot of the bears who sold below 1 are scalping or swing trading. They're taking profits. They're taking 20 points profit. And that's what's causing this bar. It's exactly where it had to go for traders who sold 1 tick below 1 to be able to make 20 points. And this profit taking isn't going to be enough to form the low of the day. And can we reverse up and form a bull trend day? I don't think so. I think we're near the Globex low, and I think we'll go lower. But because the trading range is likely after a spike up in a channel, you tend to get things that are unclear. So I suspect that if we do go above 4, it'll fail. It'll form a lower high. So I think there'll be more sellers than buyers above 4. Bar 3, we're probably always in short at the close of 3, maybe at the close of 1. So we're probably going to go a little bit more down. At this price yesterday, pretty much sideways here, and pretty much this whole thing is, we're sideways here for 30 bars, and then sideways again, a little bit higher for another 20 bars. So we're probably going to bounce here. I would, if I did not sell below 1, I was talking, but had I sold below 1, I would take 20 points and then wait to see what we get. I do think we're going lower. We got the Globex low. We have yesterday's low, and we have the 60-minute moving average, all in a very tight zone. So we're probably coming down here. We have a lot of things going on in here. Open of the week. I got that the December 6th low over here. And that's over here. We had resistance here. We sold off. We went above it. Support, 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 and we broke below it. So that blue line is, we broke above it here, and we're pulling back below it here. I could have used that high. I could have used this low, that low, this low. I could have used this high. I'm just trying to delineate an important price, and I chose that low because we broke below it. That's the most immediate one that we broke below. We broke below that. Also, we broke below that. But I'm just trying to delineate on the 5-minute chart an important area. It was resistance, it was support, and we're testing it again, and we're reversing down again. Still saw the close, but this is a lot of points without a bounce. So if you're selling the close here, your stop theoretically is all the way above 1, and you should not do that. You could keep your stop above 1 and take a chance that today it closes on its low. But as I said, I think we're probably going to get a trading range soon. We're just above the Globex low. We're just above the 60-minute moving average. So we may come down here before we bounce, but I would not put a stop above 1. At this point, I'd get out above a bull bar. If you did not exit at 20 points, I would get out above a bull bar that closes above its midpoint, or I'd get out maybe 5 points above any bar, including a bear bar, bar 4. Well, I think it's reasonable to exit shorts here and then look to sell again, maybe around the moving average. And bulls, can they scalp here? Is it reasonable to buy above 5? I would not do it, but since the trading range is likely, anytime the market sells off like this, it's reasonable to trade small, buy for any reason, buy the close of 4, buy the close of 3, buy with a stop above 5, and put a wide stop somewhere down here and buy more lower. The next time you get into the bull bar, buy more. Start buying at prior lows at the 5 low. Tesla is kind of an example of that. On the daily chart. Here's the daily chart in Tesla. An extreme collapse. And some bulls get out on this bull bar. But chances are, after an extreme collapse, the bears are going to be hesitant to sell. They want to make sure that we're not going to get a V bottom and go straight up. So the bears are hesitant to sell. What happens is bulls will start buying at prior lows. They buy with a limit order at that low. They buy in a limit order at that low, looking for a couple legs up. We have a little wedge. We had 2 legs up, 1 pulled back 2. But anyway, when you have a big sell-off and you start to get profit taking, the bears will start to wait for a couple legs up before selling again, and the bulls will start buying at prior lows, and that combination results in the trading range. So big sell-off, but probable trading range. Back to the even 5-minute chart, and that same thing is true here. If we do get a bull bar, we'll probably start to enter a trading range, and traders will start to buy below bars. Still sell the market, sell the close. We're just above the Globex low. It looks like we're going to get there. And it's so close to yesterday's low and the 60-minute moving average, which is that dashed line. We're probably going down here at some point today. It looks like we're probably going to get there early. When you get these big sell-offs on the open, it's easy to think, oh my gosh, we're going to crash. But that's not going to happen. What's going to happen instead is usually when you get a big sell-off on the open, let me turn the screen off for a moment, you get exhausted bears, and the market reach their target quickly, and when it gets to their target really fast like that, the market tends to go sideways. The bears are hoping that we just collapse and just sell off all day. And 20% of the time, if you get a strong sell-off on the open, you'll get a bear trend that lasts all day. But 20% of the time, that big sell-off on the open will lead to a trend reversal, and you'll get a bull trend. And 60% of the time, if you have a big sell-off on the open, you end up in a trading range. So this is what is most likely going to happen today. It could be a big range with big legs up and down. It could be a very tight range. But most often, you'll get a trading range. Sometimes if you have a trading range, you'll get a reversal up. Sometimes if you sell off and get a trading range, you'll get resumption down. Bears are hoping that we're going to do this. But when you have those big bars that we're having today, it's more likely that you're going to get exhausted bears, and you'll enter a trading range. So when you get a big collapse with a lot of big bars, you quickly reach the targets, and once the market's at the target, it tends to go sideways. So today is a day like this with these big bear bars, and you tend to get exhausted bears. The market quickly reaches the support zone and then stops going down. And the range can be fairly tight like that. And sometimes you'll get bigger legs up and down. A big sell up on the open and then trading range. Sometimes you try to get a trading range and you get another leg down or even two more legs down and then a trading range. We'll probably do something like this. The first reversal up is probably not going to be the end of it. And that's because we're not quite down to the support. We're not quite down to the Globex low, the 60-minute moving average, yesterday's low. Remember I said today's a good candidate for an outside down day. We're very close to yesterday's low, and we have a very strong sell-off, and we have support just below yesterday's low. So there are magnets below yesterday's low. So, right now I'm thinking that today might end up as an outside down day. Globex market, we made two big moves up and reversed down. And now the bulls are hoping we get another big move up. So trading ranges usually have some kind of a double top and some kind of a double bottom. We have a double top. Bulls are trying to get a double bottom. The bulls are hoping that this sell-off is a pullback from this rally to a new high. And the bears are hoping that this sell-off is the start of a bear trend. And just look up and down and up and down. So I'm expecting we're going to go up either here or from down here, but probably not much lower. What do you do here? Reasonable to exit shorts. Remember I said I would exit at 20 points because the trading range is likely. We have a lot of support, not much below the market. So I take the 20 points and look for the next trade. Now, can this be below the day? Any reversal up from a new low can be below the day. But this is not a good candidate for below the day. Bar 5 has a bear body. 4 of the first 5 bars have bear bodies, and we have magnets just below. So this is probably not a major reversal. This is probably not a reversal from a bear trend to a bull trend. It's probably a minor reversal. A minor reversal means a trend into a flag or a trading range. In this case, we have a bear trend, and we're reversing, but it's probably going to be minor. And that means either it'll form a bear flag, and then the bear trend will resume, or it'll form a trading range. Now, bears, they are confident that this is not going to be the low of the day, and therefore they're willing to sell. Some bears will sell with a limit order at the 5 high, and then sell more, higher, 5 points higher, 10 points higher, below a bear bar at the moving average, a 50% retracement. Other bears will wait for a stop entry, so they'll look for a bear bar forming a low 1 or a low 2 or a wedge bear flag around the moving average and then sell. Can you sell below 6? If it has a bull bar, I would not do it. But which it does, so there probably are more buyers than sellers below 6, so I would not. Even though it's a low 1 and a bear trend, we have a bear trend, we have a pullback, a bull flag, a low 1. I would not sell below 6. We got a lot of support here, and it's unlikely we're going to collapse below it. So if we go lower, we'll probably bounce somewhere in here again. Bears are hoping that this is a sell climax and the low of the day, and it's possible, but it's not likely. I think it's really important to accept as fact that no matter how strong a move on the open is, 50% of the time it's a test of support and resistance, and it's the wrong way. So 50% of the time, no matter how strong a sell-off is, you have to assume it's a test of support and that we're going to reverse and we'll get a bull trend. So here, big sell-off, and we just reverse up. Here, look at this sell-off, all right? And look what we did the rest of the day. The bulls are hoping that today will be like this, a big sell-off, and then we just reverse and channel up for the remainder of the day. And it's possible, it happens, Here's another example, big sell-off, reversal. Here, big sell-off. We got a second leg down and then a bull trend reversal. Big sell-off, reversal. Big sell-off, reversal. Big collapse, reversal. Here we have a higher low double bottom. You can call it a higher low major trend reversal with a good buy signal bar. It's also a triangle. But sometimes when you get a collapse, a sell climax on the open, the market reverses. And when it does, it usually reverses up in some kind of a channel. If it does reverse, it usually has a difficult time going much above the earlier high. So if we do reverse up and get near the high, we might go a little bit above it, but probably not much above it. Right now, the most likely thing is this is a minor reversal, and it's going to result in a trading range. As I said, yesterday we were sideways here for 20 bars, and we were sideways here for 30 bars. So we're in a bull trend, but we're starting to get sideways trading here, here, and now it looks like probably a bigger range. At some point, you have to conclude that this is now a bull trend. And one guideline that I use is if we have consecutive bull bars with at least one being big and closing on its high, it's by the close. In this case, it's a 50% retracement of this. I would really want bar 7 to be bigger than 6, and I would want bar 7 to close on or near its high and well above the moving average before I would consider buying the close. Most likely what we have is big down, big up, big confusion. And when there's confusion, traders tend to take quick profits, right? If you're confused, that means you're uncertain, you're not confident that the market is going to trend. So if you get a pretty good profit, it's better to take the profit and then look for the next trade. So the bulls who bought for whatever reason down here, they have their 10 points, reasonable for them to sell out of their longs, take profits. And bears are looking to sell rallies. They're betting that anything that looks bullish will not lead to a bull trend. It'll lead to a trading range. So the bears will sell a 50% retracement of this, which is around where we are. They'll sell the moving average, and they'll sell the 5 high. They'll sell more 5 and 10 points higher. So you have bull scalpers taking profits, and you have bears starting to sell up here. Now, 5 is a buy signal bar or a possible low of the day, a test of yesterday's low, a test of the Globex low, test of the 60-minute moving average. But it's a bear bar, and it's 3 consecutive bear bars. So it's a bad buy signal bar. And when you get these bad buy signal bars, even if you get a strong rally afterwards, the market typically will come down at least 1 tick above the high of that bar. So there's a magnet at that 5 high. So we're going to come down below this red line at some point before we get above that. Can you sell the close of 7? What did I just say about buy the close? I said if you get consecutive bull bars with at least one big and closing near its high, you will get buy the close bulls. Did I buy the close here? No, because what is more likely is confusion. Big up and big down and big up, right? And when things are confused and you're rallying, bulls will start to take profits and bears will start to short. So I would not buy the close here. If we dip below the 5 high and reverse up, that would be a buy. Can the bears sell below 8, a 50% retracement? I would not, because 6, 7 is enough of a surprise to make traders expect 2 legs up. So that means there are buyers below 8. Now what about that 5 high? Well, we're going to go below that 5 high, but we're going to get a second leg up before we get there. So bulls will buy the first reversal down. Why are we going to get a second leg up? Because it's a surprise. Surprise means a low probability event. A low probability event means traders expected something different. And you have limit order bears who sold the 5 high, who sold more 5 or 10 points higher, now thinking, oh my gosh, this could be one of those days that Al just talked about where you get a big sell-off and then a bull trend. And therefore, I got to get out of my shorts, and I want to get out of my shorts with as little loss as possible. So I'm going to buy the first dip and try to get out with less loss than buying here. So you get bears who are short from here or for any reason, looking for any kind of a pullback so they can buy back the short. So you get bears wanting to buy. And you have bulls looking at this thinking, this could be one of those days Al just talked about that trends up for the rest of the day. And that's a bad buy signal order, so I did not buy above 5. But now it looks like it could go up, so I want to buy. So you have bulls wanting to buy the first pullback. So bears want to buy the first pullback to exit with a smaller loss. Bulls want to buy the first pullback because they're impressed by how strong 6 and 7 are. So there are buyers somewhere down here, probably at that 5 high area. And the result is you tend to get a second leg sideways to up. Can you sell on a stop below 8, a low 1, a 50% retracement? As I said, we're probably going to get a second leg sideways to up. So if you do sell below 8, I think you need a wide stop up here because the first resumption down is probably not going to get all that far. What do you do right here? Since a second leg sideways to up is likely, I would not sell below 8. I would wait for a micro double top or low 2 bear flag and then sell. And since 6 and 7 are very strong, bulls will look to buy probably around that 5 high, which is also around the 50% retracement of this. Now, if you're a bull, you look at 6 and 7 and you say, well, why? How can 8 happen? How can you get a big bear bar after 2 really good-looking bull bars? Well, the bears can argue the same thing. How can 6 and 7 happen after all these good bear bars? And the bears are disappointed by the rally. The bulls are disappointed by this. So you get disappointed bulls and bears. That's one of the hallmarks of a trading range. Remember, I said that I thought this was going to result in a trading range. Whenever you have big moves up and down and up, it creates confusion. That's a sign that the market is likely to form a trading range. And whenever you have disappointed bulls and bears, bears are disappointed by the rally, bulls are disappointed by this bear bar. Whenever you have disappointment and confusion, you're probably in a trading range. And traders are unwilling to buy high. When the market goes up, bears start to sell and bulls start to take profits. And they're unwilling to sell low. When the market goes down, bears take profits and bulls start to scale into longs. Now, I said a second leg sideways to up was likely. 6, 7, first leg up, and then pause 8. And now 9 is a second leg sideways to up. So it's meeting the minimum expectations of the bulls and the bears. Can you sell with a limit order at the 8 high, thinking that 8 did not adequately test the 5 high and therefore we have to get lower? You should be trading with stop orders, not limit orders, but there probably are sellers at the 8 high. There probably are bears selling this rally as it goes up. Stop order traders should be looking for stop entries. Another reason why this is likely to become a trading range day is trading range. The market is sideways, easier to make money with limit orders and wide stops and scalping. Difficult to make money with stop orders and swing trades. And today's an example of that. Nobody wants to sell below the bull bar 2. Nobody wants to buy above the bear bar 5. Right? So you get bad-looking buy and sell signal bars. Testing yesterday's close again. testing yesterday's high. At some point, let's say this is the start of a huge bull trend day. At some point, traders have to get long. They have to conclude this is going to be a huge bull trend day. And are we there yet? We're probably always in long from the close of 7, but I think it's really not very good trading yet. This is what the bulls are hoping. If we get a sell-off, we'll form a higher low major trend reversal. They're hoping a big sell-off, and we just go straight up. But you can see what happened. We got the reversal, but it led to a trading range. Channel up all day. Sometimes, if the sell-off is not too big, the reversal can go far above the earlier high. But that's the exception. More likely it'll be this. Got a strong leg up, a second strong leg up, and then that. So trading range is most likely, even though we're rallying strongly like that, here we got a new high. They sold it. Trading range. Bulls obviously trying to get back above 4,000. They're trying to break above 1, and they're hoping that this is the start of a huge bull trend day. Now, is there a problem being flat right here? No, most traders should be flat here. What happens if this continues up into a huge bull trend? A sell-off, a bear trap, and a rally. Here we got 2 bear bars and then a huge bull trend day. 2 big bear bars and a big reversal up and a huge bull trend day. Can we get that today? When we get these sell-offs on the open, these little bear traps, you can get a big bull trend day. But the more selling you get, the less likely you're going to get a big bull trend day. And if we get 1 or 2 bars down, I call it a trap, and the bulls have a decent chance of getting a bull trend day. But if you start to get 3 or 4 bars down, like today, instead of calling it a trap, I call it a sell climax, and it's less likely to lead to a big bull trend day. And today we've had 3 pretty good bear bars on the open, so I think it's more likely a sell climax and more likely we're going to lead to a trading range than it is a bear trap and the start of a huge bull trend. While it's possible, we can get a sell-off and a big bull trend, sell-off, big bull trend, sell-off, big bull trend. Here we got 4 bear bars, and we rallied strongly, but look at over here, we finished right back around the open. So I would not call that a big bull trend. The more bear bars you get early on, the less likely the reversal up is going to lead to a big bull trend. But if you just get 1 or 2 bear bars and you get a reversal, you have a better chance at a big bull trend. And today it's more like this. Too many bear bars early on reduce the chances that the rally will continue all day, and it increases the chances that we'll do that. A lot of bear bars rallied all day, but could not get much above that high. Big sell-off, rallied all day, went a little bit above the earlier high, but not much above. Tail on the top of 9. Bad follow through 8. So not ideal for bulls hoping that this is the start of a big bull trend day. I'm going to get rid of this. I don't want too many lines on the chart. This is the bottom of the gap. That's the top of the gap. So I'm letting me delete it. So that's a gap from, this is a 60-minute chart. That's a gap from way back here. Get rid of that. And I'll keep the top of the gap. There's a lower high double top 1, micro double top 9, but too many bull bars. So better not to sell below 10. What do you do here? I would say wait. It's not a good short below 10, and it's really not very good by the close. So I think best choice is to wait for more bars. Always in long, by the close 7, but trading range likely. Too many reversals. Big up, big down, big up. And at a key price here, at a cluster of support here. Weekly chart. This looks like a good higher low. You can call it a wedge, 1, 2, 3. It's actually a pair of consecutive expanding triangles, one here and one here. Easier to see in the daily chart. Well, expanding triangle, 1, 2, 3, 4, 5. And we had one up here as well. And whenever you have consecutive reversal attempts, you have a better chance of a successful reversal. Here, head and shoulders bottom, daily chart, left shoulder, head, right shoulder, higher low, major trend reversal. Bulls are hoping this is the end of the sell-off and the start of a bull trend, but more likely this will be a bull leg in a trading range. The top of the leg might be up here, might be here, but I think maybe 40% chance this is the start of a big bull trend, daily chart. 60% chance the rally is either going to form another lower high or it'll just form a trading range. Back to the 5-minute chart. Consecutive bull bars, at least one being big, 9, and closing somewhere near its high. Always in long, but at resistance. So not a very good buy the close setup, but I would not sell. I would not sell. You have some traders selling at the high of anything, so the high of 9, the high of 10, the high of 1. But I would wait for it to stop going up, start to go sideways, and then look for a possible sell. And for the bulls, we have a possible double top here. If you're buying, your stop is all the way down here. I would not do that. Remember down here, I said the bears, if they did not take 20 points profit, they should get out 5 points above any bar, including bar 5. The opposite is true here. The bulls, if they are willing to hold and hope that we continue up, I would get out 5 points below any bar, including a bull bar 10. The choice is get out 5 points below 10, get out 1 tick below a bear bar closing below its midpoint, or getting out all the way down here. And I would not get out down here. And the reason I say that is a trading range is likely, and trading ranges tend to have big legs. So, trading ranges, it's usually better to take profits when you have them and then look to re-enter. So I would not put a stop down here, betting this is a bull trend. I would get out somewhere up around here, betting that this is a bull leg in a trading range. And if it grows into a bull trend, you can buy again. Getting near the end of the first hour, 60-minute bar. It was outside down. We traded above the high of the last hour to below the low of the last hour. Now we're back above it, so it's outside down and now outside up, outside up. And we're closing this gap from early December. Limit order bulls. They're looking for reasons to buy. They might buy the 10 low, 5 points lower, 10 points lower. I think it's better to look for a stop entry buy. The reason I say that is the legs can be big. So the bears have sold that 5 high. Some of them are still short. Some of them sold more 5, 10 points higher. Some will wait for a bear bar closing in its low and sell more. It's reasonable to be short. Is it good to be short? No, but it's reasonable to be short. So it's reasonable for a bear to sell the 5 high and then wait for a bear bar closing below its midpoint and sell more below it. 80% chance the market will come down to their average price. They sold here, and let's say they sell below 11. The average entry price might be here. 80% of the time, if you do something reasonable, use wide stops and scale in, you will not lose money. Scaling in, whenever you scale into trades, you always have to trade small. And how small? A lot smaller than what you think. So whatever you think is, when I go to a restaurant, and I order, I don't know, some hamburger, and I'll ask for extra ketchup. I always tell the guy, I want extra ketchup. And whatever you think extra ketchup is, give me twice that. Right? And whatever you think small is, it's probably 2 or 3 times too big. And you sometimes hear me talk about position sizes. Having 2 position sizes, one your usual size, and then another that's only 20% of your usual size. And that's how you should think about things. So for the bulls, this is a bull trend. It's a high 1 above 11, but it's a bear bar, and we have a possible double top, and we have 3 tails, 9, 10, 11. So I would not buy on a stop above 11. Limit order bulls bought the 10 low, but they needed to go up 21 ticks above that 10 low to make 5 points. It probably will, but I think it's better to wait for the bulls to get closer to the moving average and a 50% retracement, and for the bears, better to wait for a low 2 top, a second reversal down. Maybe if 12 is a bear inside bar, maybe sell below that. For the bulls, what happens if 12 is a bull bar closing near its high? That would be a better buy signal bar than 11. We're right near the end of the first hour. The bulls want the hour to close with a bull body, so they want bar 12, the current bar, to close above the open of bar 1, the open of the hour. And they'd also like to get a close above 4,000. The bears tried to break below the Globex low, unable. The bulls are hoping we get above the Globex high. But just look at this. Is this a good market for trend trading? No, we went up and we sold off. We went up and down and up and down and up. This is terrible for trend trading. And this is a trading range with big, big legs and big, big reversals. So even though this is a big bull bar and it's a good buy signal bar, look to the left. The context is terrible for traders betting on a trend. So we may go up a little bit more, but right now, traders see these reversals, and it greatly reduces the number of bulls willing to buy high, and it reduces the number of bears willing to sell low. Traders are betting on reversals. The bulls have bought the 9 close or the 10 close or the 10 low. What are they thinking now? They're thinking, darn, it could be a trading range. If you bought that 10 low, remember I said it'd be reasonable to scalp out with 5 points. And if you bought the 10 low, you were able to scalp out with 5 points because bar 12 went more than 21 ticks above the 10 low. If you buy the 10 low and you're trying to scalp out 10 points, it has to go 20 ticks above your entry price, and usually has to go 1 more tick for you to be able to exit with the limit order. Can you buy the 10 low again? No. You're betting that the first reversal down would fail, and it did. It went below 10 and then up 5 points. I would not bet the second reversal down will fail. It's already done what you thought it would do. I left this line above that 5 high because I do think the 5 high is a bad buy signal bar, and it's going to be important. Do I think we'll get all the way down to the 5 high? I don't know. But if we get a bear bar, maybe 14, 15, closing near a low, I think we'll come at least halfway down. High 1, bar 12, strong reversal. Bulls hoping that this is going to be a huge bull trend day, but I still think we're going to have a lot of trading range trading today. That's the end of the first hour, and we went outside down and then outside up, and we closed above the high of the prior hour. Over here on the left, you can see we closed above the high of the last hour, but we have a bear body. So something good for the bulls, outside up, something good for the bears, a bear bar at 4,000, and no close above 4,000. We've had 5 bars today above 4,000, 4 of them here, 1 here, but unable to close above. Back below yesterday's high. Is it still always in long? Yep. But probably. Now, what happens if we get consecutive bear bars with at least one big and closing near its low? Would it be back to sell the close? Yeah. Right now, this is more likely a pullback from this than a double top and the start of a bear trend. A bad sell signal bar, 10 low. So that'll be a magnet. So if we do come down here, we'll probably get back to the 10 low. Most traders right here wait. Bad sell signal bar 10, wait. Bad buy signal bar 5, wait until you get 7 and then possibly buy the close. Can you buy with a limit order? 5 points below the 10 low, 10 points, 15 points? Yes. Should you do it? No, because you'll mess it up. You'll trade too big, and then you'll be unable to add on when you need to add on. I won, but complicated, right? I think you only buy above 13 if you're willing to use a wide stop and scale in. So if you buy above 13, I would trade small. We're starting to stall around the 4,000 big round number, and we might get a couple legs down before we try to go back up. Can you buy for a swing or a scalp? If you're buying, you're hoping for a trend. So I think it's probably not a good scalp unless you're willing to use wide stops and scale in. Can you sell the 13 high? I would not. If the bears get a double top, maybe 10 and 14 with a good bear bar, then you could sell it. But this is a strong enough reversal so that chances are we've seen the low of the day. I still think a trading range is likely. I don't know if it'll be a small range up in here or if the whole day will be a big trading range day. But I think this is behaving like a trading range. Disappointed bears and bulls and confusion, and that usually results in a trading range. Remember on the open, I said 50% of strong moves up or down are in the wrong direction, a test of support, test of resistance. And sometimes you'll get 2 strong moves up or down, and both will be a test of support or resistance. So sometimes here we got a strong move down, and the bulls are hoping it's a bear trap, and this is short of a bull trend. But sometimes the move up will also be a trap, and you end up with a trading range. A lot of the bulls who bought above 12 will scalp for 5 points, thinking that a trading range is more likely than a big bull trend. When does it become buy the close again? There's one other problem with 13. There are 2 problems with 13 for the bulls. It's a high 1, but it's only a doji. That lowers the probability. And two, it's a very big bar in an area of confusion, and that lowers the probability. And three, it's a test of the moving average, but did not dip below the moving average. You can argue that that means it's an extra, it's more bullish, but you can also argue that it did not adequately test the moving average. I think we're probably going to get a new high today. Bulls are trying to get a close above 4,000, which they just did. Bears are hoping for a triple top. You can call it a double top 1 and 10, with the second top being a double top. Remember I said bears should not sell the first reversal down 10, but they'll start to sell a second reversal down. So they might sell below 15. You can see 4,000 is a problem. We broke to a new high of the day, and instead of traders buying with the stop above the prior high, it looks like they sold. A lot of the bulls who bought 13 are scalping 5 points. We still have not broken out of the Globex range. Still a 90% chance we either break above the Globex high or below the Globex low. That 90% goes down as the day goes on. If we're staying right around here 5 hours from now, chances are we will not break out of the Globex range. But right now, the odds are we'll either break out of the top or the bottom. Now, can you call this a wedge? You got 3 legs up. We gapped up, and a second leg and a third leg. A failed breakout above a double top. Yeah, it's a variation of a wedge. We have 3 attempts to break above 4,000, and we're failing a third time. So it functions like a wedge. Because 14 is a good-sized bull bar closing near its high, traders think they'll probably get at least a small second leg up. That will reduce the number of bears willing to sell below 15. Probably more buyers below 14 than sellers, but since I think a trading range is likely and we're near the high of the day, I think there'll be fewer bulls buying the 14 low. And it's a bad sell signal bar, so nobody wants to sell below 14. What about selling below 15, outside down, triple top? You can call it a wedge. The bar is big, so the risk is big. You're right above the moving average support, so the probability is low. But when you look at this, you say, gosh, this is really bad. You know, it's bad for stop order traders. It's bad for trend traders. And that's true. You know, I've been saying since early on, this looks like it's going to be spending a lot of time sideways trading range. And trading ranges are bad for stop traders. You know, not a good short below 14. We have a small double top here, a neckline. I would not sell the 13 low. Remember, I left that line here at the 5 high. And what did I say? I said that early on, I said we should dip below the 5 high. And then when we went up here, I said, well, we may not dip below it, but if we get a bear bar closing near its low, we'll probably get halfway between that low and here. That's really not a very good sell signal bar, even though outside down, failed breakout high of the day. There's probably more traders buying the market here than selling the market. Whenever you have a bad stop entry bar, a sell signal bar, you're going to get traders buying the close. So some bulls bought the close of 15, betting that we'll get a 5-point scalp. Right now, best choice, flat. Remember I said trading range, and I said the range could be small, just up here, or the entire day could be a trading range. Just up here, or the entire day could be a trading range. $14 low. I could put a line at the 14 low, but we have too many lines already. Can you place a limit order to buy at the 5 high? If we get down there, there probably will be buyers. You'll have the bears who sold that 5 high being happy to get out, break even. So you have bears buying there. And bulls know desperate bears will buy there, so bulls will buy here as well. If we get there, I'm not sure that we'll get there. 14 low, well, I'm going to go ahead and I'll put a line there. A bad sell signal bar. So we'll probably either get there or we'll get a bull bar down here, and then the market will get halfway between the high of the bull bar and that 14 low. Bulls trying to get a high one buy. We have a new high, 15. The bulls are hoping 16 is a high one buy signal bar or resumption of the bull trend. But it's a surprisingly big bear bar, 15. And whenever you have a surprise, the odds are you're going to get some follow through that will reduce the number of bulls willing to buy above 16. Best choice, flat. Limit order bulls. Some bought the 15 close, and they bought more 5 points lower. And some bulls bought the 13 low, betting the breakout below the neckline of this double top would fail, and they bought more 5 points lower. The 13 low bulls have already scalped out. They buy the 13 low, buy more 5 points lower. It gets back one tick above the 13 low. They can get out, break even on their first buy, and with 5 points profit on their second buy. And the same with the 15 closed bulls. They buy the 15 closed, they buy more lower, and they just get out. It's back above their first buy at the 15 close. They get out, break even on their first buy, and with 5 points on their lower buy. I'm not kidding when I say this, though. There are too many things going on. I did not take those scalps today, but when I'm not talking, those are the kinds of trades that I do. You can see stalling at the 14 low because you have bulls who bought below 14, disappointed 15. They're happy to get out, break even. A lot of them, the smart ones, bought more lower, and they're also getting out with a profit on their scale in trade. And the bears are hoping 15 is a big enough bear surprise so that it'll be a spike and channel down. So spike, pull back, and then channel down. Remember, we still have that magnet at the 5 high. Can you be long or short here? We're always in long, but if I had to pick long or short right now, I would pick short, betting on a second leg sideways to down. Stop order bears, they'll wait to see if we get a decent sell signal bar 18. What about stop order bulls? Well, if we get a second leg down after 15 and then get another buy signal bar, maybe 19 or 20, I think bulls will buy that with a stop. Bulls are hoping that this becomes buy the close. They're hoping for consecutive bull bars, consecutive big bull bars closing on their highs, big bull bars closing far above prior highs, above the 17 high, above the 15 high. Decent bear bar, probably a minor reversal. So the bears selling below 18 are hoping that this is the start of a bear trend, but if it doesn't collapse pretty quickly, they'll scalp out. They'll take their 5 points and then wait for the next trade. Bulls are hoping it's a double bottom 16 or a wedge 13, 16, 19, and they want to get a good buy signal bar 19. Confusing, right? The probabilities are not as high as anybody wants, and that's a sign that the market's in a trading range. And when the market's in a trading range, traders take quick profits, betting that we'll keep getting reversals. We're back above that 14 low, so I will remove that. Now, this is a good example of what I was talking about. The scale and bears who stole the 5 high, wait for a bear bar closing near its low 18 and sell more below 18. 80% of the time, they'll avoid a loss. So they sell the 5 high. They sell on a stop below 18. And 80% chance they'll avoid a loss. So 80% of the time, it'll go at least one tick below their average price, which it just did. You can see the bounce there. Part of that bounce is the scale and bears giving up, getting out break even. We lost on this sell, and they made on that sell. And they're so disappointed by this that they're happy just to get out break even. That's why we're getting that bounce, one tick below the midpoint of the two sells. And 60% of the time, it'll go at least one tick below that 5 high. So we still might go lower. Had you shorted below 18, I would scalp out part, either 5 points below 18 or at the midpoint of the sell, 5 high, 18 low, one tick below 18. Now, some bulls will say, it's a trading range. If it goes below something, I sell. If it goes above something, if it goes below something, I buy. If it goes above something, I sell. So some bears sold the 10 high, they sold the 1 high. Some bulls bought the 13 low, they'll buy the 16 low, betting that they'll make at least 5 points. For the bulls, it's a high two-legged pullback, but it's a bear bar 19. Remember, 15 was a big enough surprise to expect at least a small second leg down, which we got 19. So the bulls are back looking for stop entry buys, but they'll need a pretty good buy signal bar 20 to take the buy. Can you buy on a stop above the bear bar 19? I would not. Remember, trading range is likely. And we may have begun in trading range bar 10. And buying above 19 is buying in the middle third of a trading range. And that's usually a bad thing to do, especially above a bear bar. So usually in a trading range, when the market's in the middle third, it's better to do nothing. Traders look to buy near the bottom, especially with limit orders, 16 low, and sell near the top, especially with limit orders like the 10 high. They'll probably sell the 18 high. Some will sell the 19 high, but because it's a high two and a wedge, we have 3 legs down, 13, 16, 19. I would not be eager to sell the 19 high. If you do it, stop above 15. Heck, I would use a much wider stop, because if we go above 15, traders will probably sell it, just like they sold above 10, they sold above 1, they'll sell above 15. Can you sell below 20? Well, then you're in the bottom of a developing trading range. You're possibly in a bear trend as well, but it looks like a trading range since 10, and I don't want to be selling with stops near the bottom. So I would not sell below 20. And I did not buy above 19. The bears who did sell above 19, are they swinging or scalping? They're scalping. Look at what we've had here. Every bar has prominent tails, and we are reversing every 1, 2, or 3 bars. Traders are taking quick profits, looking for quick profits. They're scalping. Still a high 2, a 2-bar reversal in 1920, but a tail in the middle of a trading range. Not a very good stop entry buy above 20. The bears are hoping this is the start of a bear trend, spike pullback channel, but not a very good sell signal bar below 20. Probably buyers below 20. It's also a wedge, 13, 16, 19. So chances are there'll be buyers below 20, and we'll get a second leg sideways to up. The bears are hoping that this is a bear trend, but I still think we're going to end up with a lot of trading range trading. Bulls are hoping this is a bull trend reversal and a pullback in a bull trend, and that we resume up. The bears are hoping that this is a spike down and the start of a bear trend, and we continue down. I still think we're always in long. and this is a 50% pullback from this, holding at the moving average, but not a very good stop entry buy. And I would not sell below 20, probably buyers below 20. Is it buy the close? I still think it's a trading range, and I think better to be scalping until it becomes clearly a trend. So I think the bulls have bought above 20 probably will scalp out, and bears will probably try to get a lower high 18 or double top 18. Now, what about selling below 22? A bear channel. We have lower lows, we have lower highs. I would not. Also, the range is starting to get tight, and that also makes it worse for stop order traders. Bulls, hoping this is a bull flag, that this is a spike up, a pullback, and the start of a big bull trend. The more consecutive bull bars we get, the more bull bars we get closing on their highs, then the more traders will believe this is going to be a bull trend for the next 2 or 3 hours. If we don't get that, they'll conclude it's probably still in a trading range, and they'll scalp out of longs, and they'll look for shorts, scalping shorts. So far, it looks like a trading range. What about selling below 22, double top 18? I would not do it. We still have a wedge, so you'd expect a couple legs sideways to up. We have one leg up, pullback 22, so probably a second leg sideways to up. For the bears, it's a double top bear flag 18, but just above the moving average. I think it's better to wait. Right now, we're holding above the moving average. We've had a bull trend reversal. It's slightly more bullish than bearish, but I think best choice is flat. We're in the middle of a developing trading range. If the close of 22 was at or below the moving average, I'd sell below it. But because it was not, you can see not many traders sold it. In fact, some traders bought it. You can see that we're in the middle of a trading range. For the bears, double top 22, 18. And for the bulls, they're hoping this is a pullback from the reversal up from this wedge bull flag. I think best choice flat. We're always in long, but not a very good sell below 22. So I would wait. The range here is getting, I think, too tight to do anything. You can look at it as a triangle. It's slightly more bullish than bearish. We're holding above the moving average. But most traders are better off waiting. If you can buy near the bottom of a trading range or a triangle, that's good. If you can sell near the top, that's good. But right now, we're right in the middle of it. End of the second hour. The hour opened with bar 13, and we're right near the open of the hour. So 60-minute chart. We have a second doji bar, a second trading range bar. For the bulls, they're hoping 21 is a resumption of the bull trend, and that 24 is a pullback in that bull trend. About a doji in the middle of a trading range, I think it's better to wait. Not good buy signal bar. 5, 13, 16, 19, 24. Better to wait. If it becomes a trend, either up or down, by trend, by definition, it's going to last, it's going to go one way for a long time, 10, 20 bars. Therefore, you're really not sacrificing much if you wait for 2 or 3 clearly trending bars and then enter. We have a wedge 13, 16, 19. If we break below 19, that's a failed wedge bottom, and it's a breakout below a wedge. In general, whenever you have a wedge bottom or any kind of a bottom and a breakout below, 50% of the time you'll get some kind of a swing down measured move. 50% of the time it's a trap and the breakout will fail and you'll reverse up. So I would not sell on a stop below 19. Can you buy here at the market and put a stop below 19? I would not exit with a stop at the bottom of a trading range. Chances are there are more buyers than sellers at the 19 low. So it's more than a 50% chance of buyers below. Bears are hoping that it's the start of a swing down. The bulls are hoping it's a pullback from this reversal up. And it's both. We don't know which it'll end up being, but at the moment it's both. It's both 15, the start of a bear trend, a bear flag, and then the resumption of the bear trend. And for the bulls, a bull trend here, a pullback, and they want a resumption of the bull trend. So right now it's both a bull trend, a pullback, and a bull trend. It's a pullback and a bear trend, and it's a trading range. Every trading range, always, 100% of the time, is also in both a bull trend and a bear trend. If we end up down here, we'll say the bear trend began here. If we end up here, we'll say the bull trend began down here. And if we continue to go sideways, we'll say the trading range either began with the first bar or with bar 10. Bear bar 25 closed below 24, good for the bears, but trading range and near the bottom. So you'll have some bulls buying the 24 low, some bulls buying the market at the close of 25. I think BTR20230112 flat. In general, you don't want to buy too high and you don't want to sell too low. And the middle third, we're at the bottom of the middle third, but the middle third is usually, for most traders, too low to sell and too high to buy. When you keep getting these new breakouts of trend lines and then you just keep redrawing the lines. So now this is the triangle, or you could say the triangle now began here. Some computers will say it began here, other computers will say it began there. It doesn't matter. Everybody knows the market is in breakout mode. Everybody knows traders are deciding whether we're going to get a swing down or a swing up. By the close, bulls 25, probably scalp out right here, 5 points. Remember, whenever you don't want to place orders because things don't look as clear as you want them to be, there are computers and traders who will bet that everything the market is doing will fail. So anything bearish, 25, they buy. Anything bullish, 14, they sell. 21, they sell. Trading range trading. Everybody's hopeful. It's natural to be hopeful. And hopeful traders, they see something bullish, 14, they buy. Experienced traders say, it could be bullish, but I want to see 2 or 3 bull bars and then I'll buy. I'd rather be buying up here than here at the top of the range because too much risk, it'll reverse down. So experienced traders looking for swings, they'll buy a good-looking buy signal bar near the bottom, a good-looking sell signal bar near the top. We're not getting that. And then alternatively, they'll wait for a strong bull breakout, 2 or 3 bull bars, and then buy, or a strong bear breakout, 2 or 3 bear bars, and then sell. Two-bar reversal, down 25, up 26, similar to 1920, 16, 17, 12, 13, but middle of a trading range. I'm not going to buy above 26. I'll wait. Holding above the moving average. Most of the bars and most of the closes are above. good for the bulls. We're still always in long after this big reversal, but the bulls are not getting good buy signal bars, 13, 16, 19, 20, 26, 25, 26. And we're also not yet breaking out of the trading range. So better to wait. Bears trying to get double top 22, trying to get a failed breakout above the triangle, but they need a good sell signal bar 28. And bulls probably need one or two more bull bars to break free of the range, either a close or two above the 4,000 level, the high of the day. We keep failing at 4,000, but we're not going down far. Here we went down a lot, and here, not all that much. So that gives the bulls hope that we can break above 4,000 today and start to trend up above 4,000. Sometimes you'll hear a reversal and then a pullback. Sometimes traders will call it a cup and handle pattern. So you get a strong sell-off, a strong reversal, and then a pullback. And they think of this as a cup and that as a handle, and they hope for a big bull trend. But most cup and handle patterns do not result in big reversals. You know, on television, they'll talk about them as if they're major patterns. They're not. They can be, but they're really not really reliable patterns. So a strong sell-off, strong reversal. The reversal is the cup and the pullback is the handle, and bulls hope for a big bull trend. Here, big sell-off, strong reversal up. Like today, the pullback lasted a lot of bars. So the reversal is the cup and the pullback is the handle. And here we get a bull trend. A lot of times there'll be a low before the cup, and it's also a head and shoulders bottom. Big sell-off reversal, bigger reversal. So cup and handle, and here it went up a little bit, not much. Sell climax, big reversal, handle, a second attempt, and bulls get a rally. Sell climax, big reversal, a small double bottom, not much of a rally. Sell climax, reversal, similar to today, and then sideways for a lot of bars, and basically sideways for the remainder of the day. So climactic reversal is the cup, and the bull flag is the handle. Reversal, handle, did not go up very much. Sell-off, reversal, and then bull flag, cup and handle. And sometimes the pattern is small. So sell climax, reversal, and pullback. On a smaller time frame chart, this could be 20 or 30 bars, but on this chart, it's just a small cup and handle. Reversal, big down, and then a gap up, and then a pullback. So a cup and different handles here, and here. Sometimes the best thing to do as a trader is wait. And I think for most traders, that's what you do here. Keep getting reversals, but the stop entry trades are not very good. Buying above 26, you lose money. Selling below 28, you'll probably lose money. It's not a stop order market. It's a limit order market. Anything bearish, they're buying. So they'll buy the 28 low, not sell the 28 low. At least I believe more traders will buy than sell. And 26, more traders sold than bought. Everybody is waiting for more information. More information simply means more bars, and you hope for things to become clear. You're hoping to get 2 or 3 big bull bars closing on their highs, or 2 or 3 big bear bars closing on their lows. Until then, better to wait. Here, it's even difficult for limit order traders. You know, it's hard to make 5 points selling the 26 high, buying the 28 low. You can argue that we're still always in long, and therefore you can be long, stop below 5, maybe stop below 19. For the bears, they can argue we're still short below 15 or 18, stop above 18. But I think it's better to wait. I think the math is just not all that good to be in a position right now. We're right in the middle of the Globex range. Globex high is way up here. Globex low is way down here. And as I said earlier, on the open, 90% chance we're either going to break above the Globex high or go below the Globex low. But the more bars that we spend in the middle of the Globex range, that 90% becomes less, 80%, 70%. Right now, there's probably an 80%, maybe 70% chance we'll break out of the Globex range. Bulls trying to get back above 4,000, but they're not getting good buy signal bars. And that reduces the chances that this is going to break strongly into a bull trend. And the bears, the same thing. It's a very tight range and limit order trading. And I think the range right now is too tight for limit order traders. So I think everybody should wait. Wait for a good sell signal bar near the top for a stop entry sell, a good buy signal bar near the bottom for a stop entry buy, or wait for 2 or 3 consecutive strong bars up or down, and then start trading it like a trend. Daily chart, bulls are trying to get back above 4,000, and then they'll try to get up here or up here. They'll start attacking the lower highs in the bear trend. For the bulls, we have a bear trend, and we have a higher low major trend reversal, and that's a head and shoulders bottom, left shoulder, head, and right shoulder. We keep hitting this line, and good for the bears, but if you keep coming back to a resistance level, you start to wear out, you start to run out of bears willing to sell. And then what happens is the bears will only sell higher, and you'll break above the line. And now we have 5 points on the line, 1, 2, 3, 4, maybe 4 or 5, and then it'll be a 5th attempt to break above that line. Will the bears keep selling it? I don't know, but I do know that the more you keep bouncing on support, you break through it, the more likely you break through it. The more you keep testing resistance, the more likely you'll break above it. Here, support, 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 and broke below it. So to me, it looks like we're going to go higher. But as I said, I think we could go higher for a month or two, but I still think at some point this year, we're going to break below last year's low and test that measure move down from the all-time high to 4,000. Here's the monthly chart. So here's the all-time high, here's 4,000, and here's that measured move. It's below the pre-pandemic high, and it's below 3,000. Bulls are hoping this is a wedge bull flag and that this bull trend is resuming. I want to say one other thing about the market. As you know, I think Powell is a fool. Back here in 2018, end of 2018, President Trump was just chewing on him constantly, basically calling him an idiot for not pushing interest rates into negative. And I kept saying, there's zero chance the United States is ever going to have negative interest rates. The American public will not stand for it. And but anyway, Powell was an idiot, and he caved. And not only did he increase the money supply, basically giving free money or interest-free money to corporations and banks, and he did it for an extended period of time. So here, after the pandemic, yeah, I can see having low interest rates after the pandemic and making a lot of money available for banks and businesses. But all through here, I kept saying, stop, stop, stop. You're doing too much. And this price in the stock market is based upon expectations of profitability. And traders expected that the companies would earn enough money to justify this price. But that was based upon all kinds of factors. Two of the factors, one is low interest rates, which were unsustainable, and the other was the money supply, the balance sheet, Powell making so much money available for banks. And then in here, he started to raise interest rates, and he started to fix the balance sheet. He started making it more difficult. Started basically unprinting money, burning money, stopping printing money. So these prices were no longer justified because the fundamentals have changed. And he did such an extremely idiotic job managing the economy that it might take years for the earnings of companies to grow enough to justify the market being up here or above here. So I think we might be in a trading range for several years. This price, obviously price is based upon what traders expect companies to earn. They expected the companies to earn, given, the earnings in part were based upon low interest rates and a lot of supply of money. And then we no longer have the low interest rates. We no longer have that money supply. So the market had to adjust down. And I think Powell, I don't understand. As you know, I've been calling him an idiot since the end of 2018, the worst Fed chair that we've had in my lifetime. That goes back before Paul Volcker, back with Jimmy Carter. But it's going to take years for the market, for the companies to have earnings that justify this price again. The earnings justify this price in an environment where there were zero interest rates and the Fed was creating money. But that environment no longer exists. So the companies have to generate even more earnings for the price to be back up here. So we can get back up here. I think we'll get to a new high in the next year or two. But I also think that the first rally is not going to be successful. I think that we're probably going to be in a trading range for some time, 5 years, 10 years. Let me put up. This is the cash index of the S&P. And back in the late 60s and 70s, hard to see, but the market went sideways for about a decade. The price went up too far. It took a decade for corporate earnings to justify that price. And once the companies became profitable enough and they grew enough, then they could justify the price. And the same thing happened in the 2000s. Here's 2000. The market went up too fast, like it did here. And it took a decade before the earnings could justify that price again. And so sideways for a decade, just like in the 60s and 70s. I don't know that we're going to be sideways for a decade here, but I do think we're going to be sideways for 5 years or so. And I think the first test of this high will fail and that will come down. So I think we're going to go down, we're going to go up, we're going to go down, and then decide. We'll end up with a double top and a double bottom and then breakout mode. It's possible that we'll be like this, sideways for a decade. But I'm not sure. I do think, though, that this is big up, big down, creates big confusion. And when traders are confused, they're less willing to hold on to positions. And the result is a trading range. Also, there's something cosmic about this, a karma type of thing. Now I'm a baby boomer. I turn 71 next month, and the baby boomers have had, I think, a pretty cushy, pretty easy life, and but they're no longer making the rules. They're at the end of, they're losing power to the generations behind us, and I think that the generation behind us, following us, is going to care less about our wealth. And I guess I suspect that a lot of baby boomers are going to get totally screwed over the next 10 years. They've been making a lot of money in the stock market. They're retired now. They don't have the ability to earn money again. And I think, they're giving here. They gave back 20% of their net worth. So I suspect that that's another reason why we might go sideways for a decade. It's just screw the baby boomer market. Just making it really difficult for the baby boomers. Back to the E-mini, back to a 5-minute chart. I hate it when TradeStation does this. They took away my bars. My thing for collapsing. Let's see if I put up a 15-minute chart. No. Okay, so what I'm going to have to do is I'm going to turn the screen off for a minute, and I got to close this workspace and then reopen the workspace. Okay, now I'm going to reopen the workspace. And then the button for minimizing and maximizing windows will return. It's a TradeStation bug that the toolbars sometimes disappear. Okay, you can see I got the button back. Okay, bulls are trying to break out of this bull flag. Is it buy the market yet? You got limit order bulls buying, like buying the 31 low, and bulls are, as a general rule, I like, if the market is struggling at support and resistance, let's talk about, in this case, resistance, I like to see consecutive closes at or above the resistance, and I'd like the bars to close at or near their highs. And the bulls have one breakout attempt here, 32, and I think it's probably okay if 32 closes near its high to buy the close of 32 or above 15, but it's higher probability to wait to see if we get consecutive closes with bull bars closing above resistance, the high of the day, 15, and the moving average. Do I think today's going to be a huge bull trend day? I don't think so. We've had a lot of trading range trading for the first half of the day, but we might get a leg one, leg two measure move up. So here's leg one, and then leg two here, so we can get up there. I want to see how this bar closes. Can you sell the close of 32, betting it'll be like 14? I would not. It looks like we're breaking above the bull flag, and we're breaking above 4,000 again. We're breaking above the high of the day. I'd like to see what the follow-through bar looks like. If 33 is a big bear bar closing near its low, then it's a failed breakout, and it's also a wedge, 3 legs up, 1, 15, and 32. Okay, that's really not a good enough bar for buy the close. We're always in long, and we're beginning to trend up in a small pullback bull trend. We have a small pullback here, a small pullback here, but it's really not all that bullish, not bullish enough for me to buy the close. Bears are hoping that it's a failed breakout, that it's a wedge, 3 legs up or 3 highs, 1, 2, and 3. But to sell below 33, the bears will need a bear bar closing near its low. So right now, it's long. It's always in long. It's bullish, and we have a decent chance of getting up here, which is around the Globex high, right? So it looks like the bulls are trying to get up there, but it's probably not going to be a strong trend. It's probably not going to be an easy trend to trade. Okay, I'm going to sign off now. Bears are hoping for a nested wedge. We have a wedge 1, 2, and 3, and nested within it, the third leg up is a wedge 1, 2, and 3. But the bears need a good sell signal bar. They need a bear bar closing near its low. And even then, the channel is tight, small pullback on bull trend. A lot of bears will wait for 2 or 3 bear bars before selling. So right now, it's long. I get out of longs 5 points below any bar. I get out of longs 1 tick below a bear bar closing below its midpoint. You can get out of longs below 32. And for the bears, they'll need either a really good sell signal bar, 33, or some kind of a micro double top. Right now, it looks like we're getting trend resumption up. We have 2 magnets here, leg 1, leg 2, and also the Globex high. All right, I'm going to sign off.